Hi, my name is Layla and welcome to my weekly analysis for the week commencing the 27th of August 2017. Today I'm going to be talking about dollar CAD, euro dollar and Aussie dollar. And as usual, I like to start with the monthly chart, but do remember that we're coming up to the end of the month, so we're going to have some new price action that we can use to our advantage to make assessments about general direction and where the higher time frame obstacles are, which is why I like to start on the monthly chart, because I'm also going to be drawing your attention to where obstacles might be at play that we may not necessarily see on the daily and 4-hour and hourly chart, etc. And it's good to know where those are, because obviously the higher the time frame, the more powerful some of these it's usually EMAs, obstacles might well be. So we're going to start with dollar CAD, and I want to talk to you about the context of the circumstances of what we've come from and what we are currently doing, because all of these conditions I'm talking about apply to all time frames, and the information is completely generic. So this is information that you can use to make to further your understanding about any chart time frame that you're looking at. But obviously we're looking at the monthly, so I'm going to be dealing with that directly. So the first thing I want to describe to you is the fact that we've come from an uptrend. Higher lows and higher highs, smaller pullbacks, greater move in the direction of the upward trend. Where this all changed, of course, is this large bar that we've got here with an incredibly long wick, where there was an awful lot of buying momentum that then got pressed down by selling momentum, which then continued. Now, why this is interesting is because these bars are very committed, and by that I mean they generally open at one end and close at the other. They're full-bodied and they're quite large, and they've travelled a considerable distance in a short number of bars. So this is what I would describe as it's full of selling momentum, basically. Plus, the last little pullback we had, which was here, we've actually got lower than that. So we've made a little bit of what I would describe a lower low. And also, the next thing I want you to notice is that, yes, this was turned by a really good reversal bar, because it completely reversed from selling to buying. We have a rock-solid buying bar that literally provided a huge amount of momentum, which would normally have indicated that we might be able to continue with this previous uptrend. However, when you start to look closely at these bars, they are small-bodied and they all have tails and wicks, quite spiky and very overlapped. So it's taken an awful lot of effort to get to this distance here, without even trying to match this high here. And we haven't travelled particularly far. It's taken an awful lot of bars, and then it's taken 3 bars to literally dissolve this entire move. So really the momentum and the bias is not towards the buyer's side, even though we were in an uptrend. So there's 2 key things here: the downward pressure here, the momentum in the selling, plus this higher low and this lower low here, followed by another lower low. So these are now turning into the conditions of a downtrend, as opposed to the conditions of an uptrend, which is higher lows and higher highs. So with that in mind, we know that we've got selling pressure, but what it is actually dealing with is a large area, and I say large because we've got higher time frame support coming from both the monthly and the weekly, which we'll look at in a second, of some major EMAs. By major, I mean either the 200 and the 50. They're very well respected, internationally known sort of levels that both institutional and retail traders would be looking at. So if we can all see them, then it means an awful lot of other institutional traders can see them too. So they will be generally quite well respected. And normally when price is coming up towards an EMA of that kind of description of 50 or a 200, you should normally get some kind of reaction to it. That's and I know there are no hard and fast rules in technical analysis and trading, but we go on probability and what is more likely to happen. And more often than not, you'll get some kind of reaction, i.e. a bounce, which is what we have had. So I'm just going to make this a little bit bigger so you can get a bit closer. So we've had a strong sell-off. As I said, took 3 bars to take out all of this price action here. And this is quite a steep angle as well, as was this. So to me, this looks like this is definitely selling territory. They are more in control. However, they're dealing with a couple of things here. First off, we've got the 50 EMA on the monthly, which is also beautifully in line with the round price level of 124. So that's a little bit of an obstacle. The other side of it is that we've had our bounce now. This obviously is not complete, but when we look at the weekly, you'll see that that has occurred. and that has it's sort of finished off the movement that it might well need to make. We just need to check whether that bounce is actually over, or if there's any more upward momentum still left in that move before we perhaps start talking about the potential for this to break to the next level. While we are on the monthly chart, it is worth noting that should we break the 50 EMA at 124, the next level of interest is the 200 EMA at, for me, because you may well have different brokers and different pricing, but I have the 200 EMA placed at 1.2070. So this would be my next area of interest, and that is a considerable distance away. Does not mean that on the lower time frames it will not cycle all in both up and down, but in a general direction, that would be my next area of interest, certainly from a higher time frame point of view. So let's have a look at the weekly and see if there's a bit more detail here. So as I said, we have the 50 EMA on the monthly lined up very nicely at the 124 level, and on the weekly we have the 200 lined up very nicely on the 125 level. So there's a couple of things that I want you to note. First off, we had good selling. We had nicely fanned out EMAs, 50, 20 and the 10, and they're relatively smooth. They're fanning out, which is all the signs of stability and commitment to a certain direction. They're not these are not full of lots of bends and kinks, so they're behaving quite nicely, and that is of course shown in the price action, which is fairly committed to its direction. It's not too spiky. The bars are reasonable. A sort of mixed bag of large bars followed by smaller bars. There's some rhythm in this, so this is moving quite nicely. Now, naturally, as I said, when you hit a large EMA, a major EMA on the monthly or the weekly, you will expect some sort of bounce. Now, when I say on the higher time frames, you will see some sort of bounce on most time frames, but it just might not be that. You might not be aware of it on a 15-minute or a half an hour chart, etc. Certainly, if you're looking at the daily and the 4-hour, you might not notice that. But most EMAs on most time frames will cause some bounce, but obviously there's going to be a bigger bounce on the higher time frames. That's the point I'm trying to make. So we had 2 weeks of buying, which was mostly part of a retracement back into the 10 EMA, which it has now connected with the week before, and we had a bar that pressed in and then sold off in one go. It wasn't exactly a powerful rejection bar, but it did 2 moves in one go, and by that I mean it went higher and then it came lower. So this bar was the bar that connected with the 10 EMA, and that was the week before the one that I'm going to talk about, which is this one here. And from this type of price action, you would naturally expect, after a decent sell-off and a small pullback, you would naturally expect price action to continue. Now the problem is, of course, is that we're dealing with a couple of obstacles. Mostly the 50 and the 50 on the monthly and the 200 on the weekly. So there's 2 ways in which this could go, and I spoke about this last week as well. And at the time, I was wondering if we might actually gain a higher low that may induce a bit of an increase into the buying direction. However, because of the way this weekly bar has closed, and I think if I can get a little bit nearer, I may not be able to because this is MT4, and MT4 has a set size, and this is it. Okay, so we can't get any nearer. But if you can see how this bar here is actually closed below 125, this actually looks like it's in mid-flow. So my idea about there potentially being a higher low, I would have preferred to see price action stop at 125, close above that. Then I could feel there could be an area that's possibly going to hold its ground and give the potential for a higher low. I've now reassessed this, and based on the price action that we've currently got, I'm more inclined to think of a matching low, or at least a test of 124. So as I say, think back again to the monthly chart and where that is. So that's the 50 EMA. So this is obviously the EMA to break through, which I think is going to take 2 or 3 goes. So we might do it in this go, it might break it, otherwise it's going to take another go. But let's just deal with what we've got going on at the moment, because then I can talk about that perhaps a week after if it's still relevant. So at the moment we have what I would call a selling process that, as I say, is in mid-flow, and the reason why is because it's not distinctly being sort of held up by anything, not by the 1.25, and it's slightly closed below this 200 as well. And seeing as we've already broken through the 200 before, to me this implies that the 200 is a slightly softer support level than, say, perhaps the 50, which is where this price action is sitting cleanly on top of. So I am going to say that, in my opinion, this maybe has a little bit more selling to do, and perhaps a proper test, because this never actually quite touched 124. We may see a retest of these lows and potentially even a full test of the 1.24 level. So do bear that in mind. But if you are thinking of selling, be aware of where the higher time frame obstacle is, which is at 124, and so this is your space with which you've got to work within for the time being. Quick look at the daily, and I just think that really just backs up basically what I've been saying about the weekly. These price bars here look like they're quite happy just to gradually sort of chug their way down, if you like. They don't look to me like they're this doesn't look uncomfortable. They're not incredibly spiky. They're just little bars that are just gradually eking their way lower. So as I say, a move down to test 1.24 looks pretty reasonable, considering it's not that far away. So that's my analysis for dollar CAD. Let's go on to euro. So euro, which had been in a range, and this is important to remember, because if you can imagine that something has been in like a pressure chamber, if you like, when it finally gets out, it's going to be carrying a great deal of momentum with it. This is just it's a law of physics, if you like, and to be perfectly honest, it seems to be a well sort of trodden path for the way that price action behaves, and technical analysis can be read in that way. So we've got here a fairly range-bound, quite messy looking previous type of price action, now followed by this very directional line of green bars, which see, the angle is quite steep, so this means there's a fair amount of momentum, and it really showed its true colors when it broke through this 50 EMA on the monthly, with a fairly considerable close above. It wasn't a tiny close, it was pretty high up above that. So let's just go a little bit closer, so I can talk about the current price action and get back into place. So this is easier to describe on the weekly, but I just want to talk you through this because, as I say, we're coming to the end of the month, and it's worth actually just looking at what the current price action is looking like, and thinking in your mind about, if this closes a certain way, then what's the overriding direction. So if we continue to buy on the lower time frames until the end of the month, which I think that takes us from Monday to, Monday's a bank holiday as well, takes us through from basically Monday to Thursday. If this continues buying, then really we're just carrying on with what's going on. And if we're carrying on, then where are we going? So that's what we need to think about next. The reason why this is an area that could become quite interesting is because, and I need to make the chart a little bit smaller for this, is that we have this spike low here. I talked about this in a previous video, but I'm going to bring it up again because I think it's worth mentioning. We've got a spike low at the 1.19 level, and that is an area where you might expect to find price becoming slightly consolidated, or perhaps it's a well-defended level and produces more selling pressure. And also we've got this chunk of price action here on the left as well, just to back up what I'm talking about here. But this is trying at the moment to break through. So my next level of interest is more of a psychological level than a technical level, and it's the 1.20 level. The reason why I've put that in is because, firstly, it is significant. We've come from the teens, the 1 point anything, 11, 15, 16, 17, things like that. We've come from the teens, and now we are heading into our first round number of, as I say, 1.2. So this is going to be significant from that point of view. I think at this point I need to move down to the lower time frame, but first of all, before we do that, I just want to draw attention to the fact that we've got the 10 and the 20 EMA starting to get into the right sort of position for upward momentum. Let me just make that a little bit bigger, 1 second. So you can see here, so they've crossed over. They're now in the right order for the upside, whereas they've been in the right order for the downside, and now they are looking like they want to carry price higher. As I said before, this price action bar that broke through the 50 EMA on the monthly chart, that was pretty significant. So now we're just trying to work out where the next layer is. I was thinking 1.19, but now perhaps it's going to be 120. do remember that if this is in a process of strong momentum, any pullbacks that we get once price has decided that it's hit an obstacle may very well be trying to aim for this 200 EMA right up here at 124. That's a way off for the time being. That's a good distance to travel, but just bear that in mind, because it's sometimes when you're so caught up in your intraday trading, you forget where the higher time frame obstacles are, and they can really cause you problems if you're trying to sell into what you think is open space and you've got a clear run, and you don't. You actually would come smashing into this. So just remember, the 200 EMA is actually settled at the moment at the round number of 124, and that would be my next proper key level. There will be others on the way, but that's the one that I'm looking at in terms of the bigger picture. So let's get down to the weekly, because I think that's going to give us a little bit more indication about where we're at the moment. So initially, when I've been talking about euro, I have been taking into account the fact that all this period here, it's been trending. It's been pushing up, pulling back, pushing up, pulling back. And the pullbacks have not been particularly strong. It's mostly been about buying, which again is a momentum indication. And we've got the 10 EMA coming up very nicely underneath price. The angle is decent. We've got them all in the right order here. The 50 is taking up position as a major indication of the greater trend upwards. The 20 is following close by with the 10, but they're nicely smoothed and fanned out, which is another little signal that things are there's a rhythm. Things are creating their own self-fulfilling process, if you like. Once it gets going into a rhythm, it tends to repeat it, and that's why trends can carry on for a lot longer than we expect. So just one sec, I just want to make this a little bit smaller so that you can see a bit more about what we're heading into. My thinking here was that we may have had a little bit more of a sell-off at the 119 area. We did sell off. We had this rejection bar, then we came into a little bit of support. And do remember, this 200 EMA is more or less placed in the same place as the 50 EMA on the monthly in terms of a support area. So we had a little bit of a sell-off. I thought we might actually connect with the 10 and the 200, but we didn't. We actually pushed away from there quite nicely, and since then we've had a good strong momentum bar. So this is basically carrying on from where it's left off. It's just trying to continue to go. And as I've said before about bars that are full-bodied and open, sorry, that's the wrong way, and open at one end and close at another, that tends to mean that there wasn't an awful lot of they weren't, how can I put it, there was no disagreement about that direction. Everyone was agreeing that this is where they're going, so you tend to find there's no obstructions to its movement. So my thoughts about where this is going, as I said, into 120 is my next level, because it's psychological. I do have to say I want to take a bit of note of this RSI. I don't mention the RSI very much, except for when we have strong patterns or we've got momentum showing on the chart, but it's not closely followed by the RSI. Now, it's not what I would call the be-all and end-all, so please don't pay too much attention to it. But our highest point on the RSI actually lines up with this bar here. The current bar here, which has taken out this high, so theoretically we should have a point of the line on the RSI which is higher than this. We don't. We're currently there. So there's a little bit of a discrepancy here. This, at the moment, I also have to say, looks a little bit incomplete, i.e. in the same way that I was talking about dollar CAD looking like it was probably in mid-flow with that last seller's bar. There's an element of that to this as well. We are not close below 119 and we haven't yet reached 120. So there's a little bit of breathing space in here, as far as I can see, which may induce a sort of room enough for price to get to 120, test it, and then potentially tell us that it needs a bit of a rest. So this is why I'm thinking may well be traveling in the direction of an uptrend, but do we have waning momentum? So just bear that in mind as well. It's a little, I have to say, euro is a little bit difficult to read from that point of view, because it looks to me like it just wants to carry on, but I know that it's coming into a few key problems that could potentially hold it up, and I think we just need to quickly go back to the monthly just so I can remind you of what those are. And they are, let me just make this a bit smaller, they are these, of course. We've got these kinds of obstacles coming into our way, plus there's a whole consolidated area of price action here. So it's going to need a fair bit of momentum to do this. It's going to need a lot of bias on the buyer's side, and not a lot of defense on the seller's side in order to break through here. Should it do that, then there's clearly this is all about buying, and that would be the next level at 124. Quickly go to the daily just to see if there's anything on here that might be of interest to us. I've pressed the wrong button. 1 second. Yes, so again, this really just reiterates in slightly more detail what the weekly is doing. But I do want to bring your attention to this curved base that occurred, whereby what we might have been seeing on the daily was a series of lower highs and lower lows. The signal was basically here and here. It started getting long tails. Now from here, that's fine. I would expect to see a little bit of a push up because it still thinks it's in an uptrend, so it's pressed into the 20. This is normal behavior. I would expect this. But it gave us a lower high, which then implies there's a bit more selling involved. So there is, but we get these 3 long tails. And as you can see, price has started to really flatten out here. It's not kind of drawn lower. It's actually starting to level out, and sure enough, we then get these little pushes, followed by not much effort to carry on in the what might have been a bit of a sell-off, and then we get this little bar here. Price is being carried up very nicely by the 20 the entire time, and then you get this momentum bar here. So regardless of fundamentals and the impact of them on the markets at the moment, because they do seem to be having more impact, this type of scenario that occurs here is textbook. This is perfect. This is exactly the kind of scenario you'd want to see, where you get these little bars, and as I say, apply this to any time frame. It's not purely relevant to the daily, but I'm talking about the daily because I deal with higher time frames. These are smaller bars, and they are just gradually getting carried higher and higher by the 20 and the 10, and then of course you get this breakout. Now just notice this as well. We had a little bit of a flat surface here, so this bar was indeed the game changer in many respects, but we could see the early signs of where price might be going by reading some of this, and this is the important side of technical analysis, trying to read things in advance. So, as I say, just as a quick summary, we look like we're currently a bit in mid-flow. So a test of 120 is certainly, seeing as it's not that far away as well, it's about 80 or so pips away, that really isn't a big ask. And then it's a case of, if that's broken, then we really know what we're dealing with. We're dealing with a fairly powerful uptrend, which has taken out 2 major EMAs on 2 higher time frames. Really, then you'd be looking for pullbacks to buy under the conditions of your particular trading strategy. So now let's have a look at Aussie. Aussie is slightly similar to Euro, and I think this is also something worth bearing in mind, is that when you look at the currency pairs where the dollar comes first, or you have the other pairs where where they are replaced with, say, Euro or GBP or Aussie, you prefer to see it so that one is showing strength or the other. And I'm seeing by reading dollar CAD that just in simple terms, dollar CAD is looking weaker, whereas Euro and Aussie are looking stronger. So that would work. You'd get stronger Euro and stronger Aussie if the dollar is weak. So that's just little tiny correlations that you might want to think about when you're doing your analysis. Does that fit? Because it really has to be one or the other. It's quite difficult to have strong dollar and really strong other currencies simultaneously. I'm not saying you can't, but it's a much more sort of neat kind of parcel, if you like, if your dollar is weak and your other pairs are stronger, or vice versa. But in this case, we're looking at the strength of Euro and Aussie. So let's talk about Aussie. Similar kind of scenario. Can I go any? No, I can't go any bigger than that. That's it. So we're in a slightly similar situation, except this is what I thought Euro might do, and it didn't. It actually broke through this 50, whereas Aussie dollar is actually respecting it very well. So I'm really sorry I can't make this any bigger for you, because this would be, you really need to see in here. This pink line denotes where the 200 EMA is, and that I have got placed at 0.816. So this is where the next obstacle may well come into play, should price find itself being in a position to pull back and continue higher. But first off, we've got to deal with the 50 EMA, which again on a monthly chart, that's a major obstacle normally, and that is placed at, let me just get this in the right place, that is placed at 0.8035 on my charts. You may have it in a slightly different position, but more or less that's the area. So we're dealing with a layer of things here. We've got the round number, a psychological number, because it means leaving the sevens behind. We're now at the psychological level of 0.8. So that in itself is something I may well expect price to react to. So we had a zone where we had that round psychological number and we had the 50 EMA. So a bit of a sell-off was expected and we got it. That was really no surprise at all. Let's just go back to this, of course. Remember I said about the pressure cooker process, and we had a clearly defined zone of resistance that we needed to break through, but as we kept making higher lows, the pressure was increasing to the upside, and we've burst out, or rather Aussie has burst out, into a pretty immediate obstacle and responded accordingly. Now, if we get a higher low, pulling back into the 10 and the 20, which are now starting to organize themselves in the correct order, then really that spells to me that this is a very comfortable market for taking a pullback and another shot at trying to break higher. Be a bit easier if we look at this on the weekly, so I'm going to do that in a sec. But just notice how these EMAs have gone from presenting price action with a resistance level, if you like, even though it's dynamic, to now being on the side of buying, where they're looking in a much more supportive sort of role. Let's go on to the weekly, and let me just organize this for you. So weekly wise is again pretty textbook stuff. We have a good strong momentum move, smashes into the 200 on the weekly. So again, we're doubling up on quite a lot of our major EMAs on our weekly and monthly charts at the moment. They are producing double obstacles. So to see price react to that it's standard stuff. I would expect that. And then it's just a case of thinking, well, if this is going to bounce, where's it going to bounce to? So a couple of things. First off is this highest point here, which correlates with this turquoise line, which I've got at 78.40. That was my initial interest, plus the next thing was connecting just slightly lower with the 10 EMA. Incidentally, also the fib move from the low point here to the high point here presented us with a 50%. So there was a number of factors involved in this being the area where we'd find it quite interesting. So that was all going to be 77. Sorry, my apologies. 78. So around the 78 level. Another factor, you've got a round number of 78. So we've got the 10 EMA, we've got the round number of 78, we've got the 50% fib, and we've got the recent high here. So this whole zone between 0.78 and 0.740 was going to be of interest. And sure enough, we've done it, and it's given us a nice solid buying bar with a good long tail. So the problem is that this is following the rules of an uptrend very nicely. As I say, we've got a low here, followed by a high, followed by a higher low here. So you'd expect price to try and continue, and it is trying to continue. But this pink line at 79.55 is in fact the 50 EMA on the monthly. So as you can see, this is where price is trying to break through at the moment. It's made 1, 2, 3 attempts so far in terms of weeks, and it still hasn't managed to do it. So this is significant, because if it can't break through that, then it's unlikely to break through this, and then it's unlikely to break through back through the round number of 08,000. So this is what we are currently looking at, a market that wants to carry on buying but is really stuck under a particular obstacle. As I said, that obstacle is at 179.55, and that won't show it to me. Yeah, 179.55. So we would really need to break through that, and then of course that takes us into the 200, and then it takes us into the 8. So the reason why I'm talking about Aussie actually in this respect is, yes, it looks like a buying market at the moment, but be careful, because you've got layer upon layer of obstacles in your way, and you really need to exceed them. I would be far happier if we got on the top of the 200, because then we've definitely exceeded the 50, and I'd really want to be on top of the 8, on top of the round number 08,000, sorry, apologies. If we're above that, then we've done everything we need to do. We've taken out all of our obstacles. We've effectively pushed through, preferably given ourselves a higher low, and that all of this indicates going to the next stage, which is this level here at 8160. Now, I believe I would have put that in because on the monthly, it's the 200. So there is room. Once we get past the 0800 level, then the next biggest obstacle in our way is going to be the 200, as I said, at 8160. Do remember to check where your particular 200 EMA is, because it may be in a different place to mine. So that's where I see the next point of contact. And let's just go back to the weekly so you can get a bit of a clearer idea about the actual distance. And that's not this pink line here. That is the, what was that? 1 second. Oh, sorry, my apologies. This pink line here is actually the 50, and the pink line here is an area of consolidation, which is not to do with the daily. I do apologise, I may have actually confused my... Oh, sorry. What I'm basically talking about with this pink line here, my apologies, because quite often I use pink lines to denote where the higher time frame EMAs are. This is actually just an area of consolidation, so that's actually less problematic than trying to burst through a 50 EMA on a higher time frame. Do apologise, I need to reset some of that information that I've just told you. So can we get... Nope, I can't get any nearer than that. So what we've got here is in very close proximity to the 0800 level. We've got the 50 EMA, and then the 200 EMA is this one here at 8160. So going back to the weekly, then what we've got is this is what we need to break through. We actually need to break past the 200, and we need to get above the 8, and we actually really need to get above this level here at 0835. So apologies for the confusion there. This can happen when you're dealing with multiple time frames simultaneously and currency pairs in a quickish video. So yes, this here is just a consolidation area, which actually implies this is going to be rather easier to break through. And I'm going to say, in my opinion, and I don't mind being wrong, because all I can ever do is read the technical analysis, and so if I'm wrong, it's going to be because the market will sometimes do things that are erratic. But on the whole, if you're good at reading technical analysis, you'll be on the right side of more often correct than not. So based on technical analysis, this is definitely trying to press higher. This, as I now just realised, is a much softer resistance point, so is not such a problem. I see the next press into the 0800 level. That's where I need to see it, particularly if we start seeing price getting above this level here at 79.55. Then the next point is the round number of 0800. So that gives you a little bit of space within which to potentially look for opportunities. And then do remember that you've got a little basket of obstacles to get through as well. A retest of the 8, if that isn't broken, then what you might find is it produces a lower high, i.e. lower than this. If we get a lower high here, so if we had an attempt to retest that doesn't actually break through and we end up with a lower high, very likely we'll see a deeper sell-off. That's generally how it works. A second attempt that fails, whether it's a matching attempt or if it's a lower high, generally indicates that that market is probably going to try and do the reverse for a short period of time. So if this fails, then we might well see a deeper sell-off, which could then see price potentially trying to connect with the 20. Do remember this 20 will be traveling a little bit with this price movement as well, so it may well end up being a little bit higher. But if that's of interest at the time, we'll talk about that in another video. So yes, in summary, taking out the 07955 level could well give you enough room to retest the 0800 level. Okay, that's everything I want to say for this week. Thank you very much for listening, and I look forward to speaking to you next time. Bye bye.